Hey guys, what's up? Alec back with the daily stock market, and look at that. We have stocks down huge on Friday, huge red day, 13% downward movement for AMD, Roblox down 11%, Redfin down 10%, Shopify down 10%, Coinbase down 10%, and the list goes on and on. So in this video, we're going to go over the stocks that were down 10% on Friday, and we can see that these are some of the more riskier stocks like Shopify, Redfin, Roblox, AMD, Coinbase. So stay tuned throughout this entire video so you don't miss out on any important details. Obviously, that translated to a super lucrative or super green day for us because we took a lot of put options out. AMD is up 137%. So if you want to get access into my trades, make sure you message me on Instagram to see all my buys, sells, and everything in between. But how we're going to start off this video is talking about AMD down 14% on Friday, down 28% in the last month, and in the last year, they're down 45%. So are they a good chance to be buying right now? Are they one to be staying away from? We can see there's a good chance that we'll see AMD under $50 per share once again, and I think around 50 to under 50 and closer to $45 per share is a good place to be buying AMD. Also, watch out for a big bounce back on AMD because when AMD sells off big, like we've just recently seen it, sell off around 40%, there could be some kind of dead cat bounce coming up here in the short term. So here we have an article from Simply Wall Street. AMD, a great stock for the long run, but there are more risks in the near-term future. Key takeaways from this analysis: AMD announced that the third quarter revenue will be 14% lower than expected. So watch out. Definitely not buying yet. I'm waiting for their earnings, AMD's earnings, to take place because I think that they can fall big on earnings news coming up shortly here. They have earnings on November 1st, by the way, so mark that on your calendars. Demand for the PC market has dropped substantially compared to previous quarters. AMD is well positioned for the long term, but there are risks to the share price in the medium and the short term. Okay, prices on a Friday fell sharply after the company released selected preliminary third quarter results. In its summary, the release indicated that revenue will be substantially lower than expected due to softer PC demand from the market. AMD expects third quarter revenue to be about $5.6 billion compared to previous estimates of $6.7 billion. This reflects a year-over-year growth of 29%, where it was previously expected to be 55%. The slowdown reflects the lower demand from PC market, which leads to revenue for the client segment falling 40% year over year and 53% from the second quarter. Data centers revenue is still expected to be 45% higher from a year ago, and revenue for the gaming segment will be 14% higher. Operating expenses are expected to be lower than expected, but the gross margins would also be lower than expected. This renewed guidance is really all about lower sales due to the PC market. So obviously there is a lot of risks with AMD right now. We see there's a PE ratio of 24 on AMD, implying it is somewhat of a good deal. However, I do believe that we can see AMD under $50 per share and even closer to $45 per share. So I have my price alert set at $50 per share, $45 per share, and $40 per share. And I think these are three great price points to start phasing yourself into something like AMD for the long term. Obviously, buying more shares of AMD closer to that $40 price point. Okay, Shopify is the next stock that we're going to be talking about, down 10% on Friday. And in the last 3 months, they're down 20%. In the last year, they're down astonishing 80%. Absolutely wiped out. We have Shopify at an all-time high of $170 per share. So we could easily see a 3 to 5x on Shopify over the next few years. Again, this is a longer-term stock, a very risky stock in the mid to short term, but the main benefits of holding Shopify, obviously are going to be coming from the long term. Also, we have a reminder that the Shopify will be reporting its Q3 earnings on the 27th of October. There's no need to argue that Amazon had given its long-term investors a handsome 10-year return of 700%, with Shopify likely to do the same over the next decade. The Fed's terminal rate of 4.6% by 2023, we reckon that most of the pessimism is already baked in, with nominal downsides from current levels. Therefore, investors may want to load up in the low $20 per share before the September CPI. We also see that Shopify's margins remain tight with a profitability push back another year. So how many more years will they keep pushing profitability back is definitely something to be considering. Overall, if we pull up a 5-year chart, if we take out that huge boom of 460% that we saw from 2019 to 2021 in Shopify, we pretty much have Shopify at the same levels that it was before that big boom. Okay, so I think under $30 per share is a good place to be buying for long-term investors, but closer to $20 per share or even $15 per share is going to be the absolute best place to buy in. And I'm looking to get my average cost on Shopify as close to $20 per share as possible. Yes, obviously there's a lot of risks involved with something like Shopify, but there's also a lot of upside potential. You know, something like Shopify could create 300%, 400%, even 500% gains over the next 2 to 3 years or even more. Okay, now we also have to talk about Coinbase real quick, down 9%. And in the last 3 months, they're still up 19%. In the last year, they're down 73%. So are they a good time? We can see they've been consolidating since May, not really moving much, only up 13% from them. But they were as high as up 58% on August 8th, and it seems like their lowest point was under $50 per share, closer to $49 per share. So I personally have price alerts, price targets set around $50 per share, $55 per share. I think we'll see Coinbase under $55 and closer to $45 to $50 per share, where I want to get my average cost on Coinbase as low as possible, closer to that $45 per share. Remember, this is an extremely risky stock as well. If you believe in cryptocurrency over the long term is the main reason why you would want to own something like Coinbase. You can see that I have an average cost of $63 per share and 7.6 shares. So obviously I want to get my average cost a lot lower. I have to buy a lot heavier, around $45 to $50 per share. This is a stock with great risks, so it's obviously not for everyone, and obviously it's mainly for the people who do believe in cryptocurrency over the long term, Bitcoin and Ethereum, for example. The regulatory landscapes and long-term viability for cryptocurrency remains unclear, adding a level of uncertainty to Coinbase and other exchanges. Coinbase's sterling reputation would be heavily damaged if it were to become a victim of theft and ever presenting risk for the cryptocurrency exchange, which is a good point. If a huge hack happens, we can see Coinbase stock fall as much as like 20% in one day, for example. Not saying that that will happen, but the risk is obviously there. Crypto markets have historically been deeply cyclical with long periods of low prices and depressed trading volumes. This adds considerable volatility to Coinbase revenue flow, and Coinbase will probably also follow Bitcoin and Ethereum pretty closely as well. Some of the positive things that we can see, or the bullish statements, there is a global market for cryptocurrency, so it's not just America. We can obviously Coinbase can tap into like India, China, and a bunch of international markets, which is huge as well for revenue and income and margins and everything in between. Regulatory approval from international regulators will allow Coinbase to expand its operations and increase its footprint globally. Coinbase has been able to accelerate the rate at which it lists new cryptocurrencies, giving it more exposure to growth and the asset class. Coinbase has established itself as the leading U.S. cryptocurrency exchange and established a strong reputation for security in its industry filled with risk-averse traders. Okay, so overall, I do like Coinbase, but I like them a lot more attractive, around $45 per share. I actually probably will end up selling half of my Coinbase shares right now. I have 507.6 shares in my short-term Robinhood account that you can see right here. But I'll probably sell half of that and try to buy it closer to $50 per share or even $45 per share on Coinbase. So that's my goals. And that's my update on Coinbase. Okay, Roblox is another stock that we're tracking right now, down 11% just today, or Friday, I should say. And if we pull out to the yearly, we can see them down 54% with an all-time low on May 10th of $23 per share. Okay, remember they IPO'd at $64 per share. In my opinion, we will see them under $30 per share and closer to $25 per share again. The question is, will they go under $23 per share and set new all-time lows? In my opinion, I think there's a good chance that they can. So I'm not loading up super heavy yet. You can see I only have 2.8 shares on my Roblox. It's because I want to buy heavily under $25 per share. So obviously the risk versus reward under $25 per share is a lot more attractive for Roblox. Something like Roblox is another risky stock. No one knows what's going to happen. They could have huge growth and explode past new all-time highs of $150 per share in the next 2 to 3 to 4 to 5 years, especially if they are able to capture the metaverse and the digital space like analysts are expecting them to, with a market cap of 20 billion. This is a market cap I wouldn't be shocked to see over 100 billion in the next 3 to 5 years. We can also see with 49% ownership, Roblox Corporation boasts a strong institutional backing. So obviously institutional investors are seeing something good in Roblox for the long term. Mainly institutional investors are long-term investors, so that's something to be considering. 49% of an ownership is in institutional investors, which is a good thing. Here we have a fresh update on October 7th for some bearish points on Roblox. Competitors have more development resources and offer games with better graphics, deeper gameplay. As Roblox users grow up, they will leave Roblox metaverse for other gaming experiences. Roblox's model will invite regulatory scrutiny and force the firm to spend more money on moderation, limiting margin expansion. Roblox's tremendous subscriber growth was highly stimulated by the pandemic. A return to less restrictive lockdown guidelines will cause a major decline in users and growth monetization, which could be true. You know how Fortnite was like the game of the, year or whatever you want to call it? It was only hot at the moment. A lot of people think that same thing can happen to Roblox. It's only hot at the moment and it'll fizzle off a couple years down the road. Okay? I don't believe that will be true with something like Roblox. Is a lot different of a gaming experience than a traditional gaming because it allows users to actually build their own games with Roblox. So it does have a unique feature in that way. Think of Roblox also more of like an app store. It's not like a game on the app store. It's like a whole app store. There's several games within Roblox, which makes it very unique. Okay, Roblox will benefit as its user base grows older and has more disposable income. Roblox's business model allows the firm to self-finance while it focuses on expansion its subscriber base and monetization. Roblox is uniquely positioned to take advantage of the trend towards increased screen time amongst the younger consumer. So if you need to be diversified a little bit more towards the younger consumer or the metaverse a little bit more, this could be another risky stock to have in your portfolio, especially if we see them under $25 per share once again. So I hope you guys really appreciate that video. Thank you for all the love and support you've been showing on the channel. If you want to get your stock market account to the next level, go ahead and check out my success number 6 highlight on my Instagram. So many success stories now, over 500 positive testimonials, over 1,900 total signups on the close friends list. DM me to join. Many new option trades coming this week for the private group only. Options account up 65% since joining. Well worth the money. Helping students out with 825% gains just for following my signals. Yes, you can follow my trades, but I also want to educate you through the whole process, which is the priceless part of having a mentor. My goal is to make you a more advanced trader so you can also start making trades on your own. All right. We also see another student up $750 just in the past hour, cruising into the weekend, having an astonishing Friday, and the list just goes on and on. So take some time out yourself, spend some time reading through those success stories, countless success stories, and I definitely want you to be the next success story too. So reach out to me here on Instagram, the Daily Stock Market, 179,000 followers, almost 600 posts. I reach out to every single person that DMs me. I'll send you over an application so that way I can help you out the best way possible. It'll just ask you some questions, and then I'll shoot you over my website so you can check out how much everything costs and how it all works too. So thank you for all the love and support again. Share this video with a friend. I'll see you guys in the next video. And remember, don't time the market, buy the market. Peace.